Welcome to another S&P 500 analysis. Today is the first day of October 2021. So in the past couple of weeks, the market been pulling back and it's been down, over 5% a bit. So is the market continue to pull back, or is this it? This pullback is done and we are heading back to all-time high. Well, in this video, we're going to take a look at the market sentiment and also the internals, along with the price action of the individual index, and see what they are telling us. In addition to that, we're going to take a look at gold, crude oil, and the 10-year yield and the US dollar, and see what those markets are telling us. So stay tuned. Now let's start off with this long-term monthly chart. Remember last month, end of August, I put up this chart and basically want to highlight that we were, at the verge of breaking out of a 7 consecutive up month. Right, as the end of August, it have been the S&P 500 has been up 7 consecutive months. So I basically went back and all the way back to 1930 and map out all the period in which it has consecutive month and see what is the longest duration and how frequent it is that we see the 7-month, consecutive month type of a trend. And as you can see, there are some even more than 10 months, right? Back here is 12 and a series of 11, 7, 8, and 9, and 10. So just prior to this 7 consecutive month period, we saw a 10 consecutive month period. So let's zoom in here and take a look at what has transpired since. See, we saw September was a down month. And in matter of fact, it's a engulfing month. It's a outside month because the high of September is actually higher than the high of August. So that makes it an outside month. And as you can see for today, the first day of October, we see that it actually started up. Well, it actually came down a bit, and now right now it's closing up. So we'll see how October play out, because October usually be a little bit of a scary month. Remember, we have that Black Monday on October 19, 1987. Then we also have a lot of these what we call October massacre. So we'll see. Will we get spooked? Like Halloween, right, during the month of October in the market. So we just have to be a little careful, because we'll take a look at some of the price action and also internal to see are we out of the wood, or should we be continue to be cautious for more downside to come. As you can see from this weekly chart of the S&P 500, we had a down week. The S&P 500 lost a little bit over 98 points for the week, or 2.21%. And at a decent, huge range, 168.78, almost 169-point range on the week. And you can see that it closed below this 10-week moving average, but it's still above this 40-week moving average here. So right now we're still seeing price inside of this channel here that I have here. Now, of course, it broke this wedge here, this trend line. A lot of market participants were watching. But right now, we're going to see, are we going to get a bounce off of here, or is it going to come down to possibly to this trend line here, and also seems to be in confluence with the 40-week moving average. So we'll see. Maybe it will come down to this 4,200 level area. So let's take a look at the sentiment and also some of the internals and see what they are telling us. First of all, in this daily chart of the S&P, as you can see on Monday, we actually had a little bit of an inside day and just down slightly. Then on Tuesday, that's when the rain started to pour, right? So it came down, and today we got a little reprieve and came back up. It did open, came down at the or shortly after the open, and then it bounces back up. So right now, for the day on Friday, the S&P 500 actually closed up 1.15%, almost 50 points, and closed for the week at 4357.04. If you look at the VIX is still above this 20 level inside this 20-30 zone, although it is coming down a bit from its high. Last week, we saw a high of somewhere around 25.71. And this week, we did see on Tuesday a high of 23.25. And then yesterday, we saw a 23.14. So today, it closed out at 21.15. And the put call ratio is a little bit high, but it's still underneath this 0.75 level. Today it's only at 0.72. So, there's still some fear. I mean, at least, the market participant are taking some of the risk off, but there is still a little bit of, testing the water there on putting a little bit of risk, as you can see from the VIX coming down and also the put call ratio coming down just a tad. And the up-down volume ratio for today was quite respectable. It was 3.5 times more up volume than down volume, and also the advanced lead decline by a margin of 1,323. So it's not a bad day on Friday for this bounce back rally. Now the question is this just a dead cat bounce, or this is a little bit of a low from this pullback, and that we will be looking at a price action coming back up. So we're gonna take a look at that a little bit later with a little bit more detail. Also, today the new 52-week high outnumbered the new 52-week low in the New York Stock Exchange. So it's actually there were 9 more new 52-week high than 52-week low. So we did see the last 3 days, the new 52-week low outnumbered the new 52-week high. So although we got 9, just a little bit, it's still, the market is still pretty weak in terms of number of issue making new high versus number of issue making new low. Now, in the previous video, I did say about a little bit of a positive divergence between the cumulative AD line and the S&P 500, and we're waiting for a pivot to put in a low here, right, a pivot low, to see are we really seeing a positive divergence. And as you can see, we got this pivot here, and notice that the S&P 500 closed with a new, a lower low close, compared to this low here. And you can see that the advanced decline line, the cumulative advanced decline is higher, got a higher low here than this low. So in that sense, we are seeing a positive divergence between the S&P 500 and the New York Stock Exchange cumulative AD line. So that is a positive sign that heavy selling might be coming to an end if it's not already reached the end there, right? Because we are seeing more issues start picking back up. And for the NASDAQ 100 today also closed up over 100 point or 0.7% on Friday. See that it also been down for the last 4 days, the first 4 days of the week, except for today that we actually came back up and got a little bit of a hammer candle. So that's also encouraging too. But the up-down volume ratio is not as strong as the New York Stock Exchange. You only have 1.09. So it's almost 1.1 in favor of the up volume, and the advanced outnumbered the decliner by 1,058. So although it's not robust strong, right, but it is respectably strong. Now here's the weakness in the NASDAQ market is the number of issue making new 52-week high versus number of issue making new 52-week low. As you can see, there's only 82 new 52-week high today versus 157 new 52-week low. So the 52-week low still outnumber the 52-week high, and you can see that here on this chart here. So that is not a good sign. There's still a lot of issue is close to that 52-week low level, that it doesn't take much to push a lot of those issues into new 52-week low. Now, aside from the weakness in the new high, new low, we are seeing some positive sign here on the advanced decline, the cumulative AD line, similarly to the New York Stock Exchange. As you can see, this low in the AD line is actually higher than this low here, versus the NASDAQ 100 closed at a lower low versus this low. So we are seeing a little bit of a positive divergence. So that too is also a good sign. So once we build up a little bit more momentum on the advanced decline line, then we could lift some of those issues that is borderline to a new 52-week low to be a little bit distant away from that. And maybe we could see a little bit more of new 52-week high over the 52-week low number. So although the last few weeks we have seen from the all-time high on the S&P 500 to the low of today, it essentially have gave up 5.66%, a little bit over 257 points. A lot of market participants haven't seen these kind of decline for quite a long time. This 5.66% is not that big of a deal in terms of a pullback, because normally we see a 8 to 10% type of a pullback. Then once we get below greater than 10%, then people start looking for that bear market territory by someone's definition of that 20% pullback, right? So right now we're basically looking for a pullback. Once you get under the 10%, then we'd be talking about correction. Okay, then when we get to that 20% or below, then we talk about a bear market. So right now, we're still looking for sign of support here. And when we take a look at the individual price action of the indexes, we're going to take a look at some of the potential support and resistance level to keep an eye on for the coming weeks. Now let's take a look at the price action of the individual index on a daily basis. Well, a little bit more detail here. And we are here looking at this S&P 500 on the daily chart. As you can see, it came up to this trend line here and got a pivot and reverse back down. Remember last video, I also said that we're now looking at a reversal here. And I removed this Fibonacci retracement and put in this Fibonacci retracement to see what are the possible level. And as you can see, it is trying to break below this 100% point here at 4304. Got a nice bounce back up above that today after early session move below it, but we still keep an eye on it to see would it come back down, because we are looking at these level, this 42.55 and 42.32 to get tested, essentially this zone here, and that is also in confluence with this 127 extension on the downside based on this Fibonacci retracement. Okay, so we still be watching for that potential downside, but if it comes up, we're still looking at this, basically this 50% level here, the retracement at 44.25 area, and that is also in confluence with this trend line here, the potential resistance. Now, for the market to actually reverse itself, we basically have to look at to watch this come up to this level here, get above this pivot high, and this pivot high is see what that level is 44.6540. So we want to see it get above this 44.65 area. Okay, then we to see what it try to inch its way back up to the high here at 44.4585. Now remember, we're still looking for that Globex all-time high from the ES, the Emini S&P 500 future, to get taken out. So so that is still the present that possibility for the S&P 500 to make a new all-time high. But again, the market doesn't tell us how or when they're going to do it. Okay, but it does give us a sign that what it is intention. Okay, so right now we don't know. Will the price actually come down? Come down here, get these level before it go back up, or is this it? That gonna break through and then do a bounce back up. So those are the possible scenario that we have to keep an eye on. And for the NASDAQ 100, as you can see, for the NASDAQ 100, we also saw it came down to this 127 extension of this 14,584, and it got a nice bounce back up from it. and put in a sort of like a hammer type of candle here, spinning top type of a candle. So we'll see, will it come back up, to this trend line, essentially fill this gap here somewhere around this 15,100 area, and see would it get a rejection and pushes back down once again and retest this 14,600 and possibly get below this trend line here or come down and test this trend line. So that's one possible scenario. Or if it come to you and fill this gap and move itself back up and get above this 15,000, near this 15,300, then we could see maybe a possibility of it moving back up to the high. So this level here is essentially 15,356.92. So say 15,357. And for the Russell 2000, you can see that Russell 2000 got close to this 2297 level that we mentioned in the last video. And right now it came down to this 2195. Kind of held above it. It actually did not come down and tag it. It actually stayed above it. So we'll see, is it, try to make another attempt on regaining that, reclaiming that 2297 level, or is it just a little bit of a bounce and will work itself back down to this 2134. So I'm still watching the Russell to see would it be able to break out of this zone here. Been consolidating in this zone since February of this year. So gonna wait and see, which direction is the Russell 2000 gonna break when it break out of this this zone. Now, if it break above, then it will be really bullish for the market, the overall market. But if it breaks down, then we could see a little bit more downside on the other indexes as well. And here, looking at the Dow Jones Transportation, this is the weakest link right now, and it did broke to the 14,242 yesterday, and then now today it peaked back above it. So it seems like it's still floating with this level to see would it stay above or would it go below. If it come back up, you still have to contend with this trend line here as potential resistance somewhere around this 14,500 or so. Okay? But if it remain to be below this 14,242, then I'd be looking at this level here at 13,656 as the next potential support, and that is pretty much in confluence with this 282 retracement, the Fibonacci retracement on this particular swing. And here on the Dow Jones Industrial, you see the Dow Jones Industrial is consolidating in this zone here and been testing this 33,800 level a few times. And today it came down to this level once again and it popped back up. Yesterday it sold off and came close to to this level and closed just above it. So we'll see, will the Dow Jones Industrial move back up to the top of this consolidation zone or balance area at 35,150. If it could break out and break above this level, then we could see the high could be back in play. But if it break below this 33,800, then I'd be looking at this 33,000 as the next potential level of support. And looking at the New York Stock Exchange Composite Index, as you can see, it also been consolidating inside of this zone here, this range. And right now, it is at the bottom of this range and try to bounce back up to this 16,708. But if it breaks this range and come down, then I'd be looking at 15,775 as the next potential support. And also that would be, dip below this trend line here. So we've got to keep an eye on the New York Stock Exchange Composite because this is a broad market type of index. This is all 3,000 plus stock that are traded in the New York Stock Exchange that make up this index. Here we are looking at the 10-year yield. As you can see, the 10-year yield came up and peaked above this 1.53 level here the last few days, and then today it dipped back down and came down to 1.465. So we'll see, would it come back and test this 1.4 level. Remember I said that we probably see a little bit of a pullback and come down and test this 1.4. So this is the beginning of that pullback to come down to this 1.4, or this is just a little bit of a temporary move down, and then get ready to shoot up and push up to this 17 or this 1.76 area. Because once we get to 1.76, that could be trouble. All right, so watch out. And here on the US dollar, you can see it's also kind of pulled back a little bit as well. We're basically looking for the dollar either come back into this zone here and work itself back down to this 92 level, or basically just going to chop around and then push up to this 95.7. So keep an eye on the dollar here, because right now the dollar is still remain to be strong, although we did see a little bit of a pullback today. But you look at here, you know, it's been quite strong ever since the beginning of September here. And we see here on the oil is still, you know, up at this 75 level, $75 level. And like I said, I wouldn't be surprised to see it come back up to try to test this close to $77 level here up at this trend line. Because with the pullback of the US dollar, you know, the retreat of the US dollar will also help the oil to move up a bit. So we'll keep an eye on that. I don't think oil is gonna collapse. I think the oil price is gonna, you know, just chop around on an uptrend here, and we just have to wait where it will find major resistance and then start coming back down. But right now, it doesn't appear that it has found resistance yet. Maybe up at this 77 level, who knows, right? So we just keep an eye on it to see, because if you look at this here, also you could make a case that maybe it is forming a little bit of a bull flag here, right? And that could push it up to somewhere around $80 level. All right, I think Goldman just recently put out a $90 target here. And for the precious metal, looking at silver, remember we're looking at silver to come down and test this 2272 area, and it broke through yesterday, and right now it seems to you know, come back a bit today. It is a inside day today for silver. So keep an eye on it. It could be coming back up and retest, you know, basically you do a back test of this 2272, or just then come back down to this 1960 level. That's basically what I'm seeing. Silver might possibly work itself down to 1960 area. You know, of course, it could come up here and then maybe you just chop around until it find confluence with this trend line as a resistance and then pushes back down. So we'll see. But definitely, I would kind of shy away on the long side on the silver right now, at least for the time being. And for the gold, remember last time I was talking about this inverted head and shoulder type of pattern. I say, you know, since the price dipped below this 382 retracement, or outside of this retracement zone, to me, it's kind of, you know, a little bit too high of a shoulder, you know, if you put it in the head and shoulder type of framework. So I don't consider this as still a valid inverted head and shoulder pattern. But who knows, you know, I mean, you know, it could come back up like this and then break out and do a little bit of a major move. But for me, I basically watching for gold to come down to this zone and see it could hold these level, and then maybe come up. And instead of looking as a inverted head and shoulder, I'd be looking at it as a double bottom, or this big zone here, this breakout zone, and see would it get back up to this 1923. So I'm still looking at gold for a little bit more downside, even though today it kind of you know, got a nice gain here, but I'm still looking for a little bit more downside on gold in the coming days or the coming week. All right, let's take a look at the Emini S&P 500 future, the ES. Remember last week I was talking about this zone here, and we're basically looking for this to either break above, the 4460 and come up to this weekly point of control, or break down and dip below the 4420 and come down to this weekly value area low. Then during the midweek, we're basically also looking at these low that are going to get tagged. And as you can see in the last couple of sessions, it came down and tagged these low here. So right now it's coming back up to this weekly point of control here, this week's point of control. So essentially we're watching for this particular point of control. So for the coming week, we want to see would it be able to come back up, break this value area high and come up and tag this weekly point of control, or would it reverse back down and dip below this value area low here and put in a new low. And if we go and take a look at the market profile shortly, we could see there are some lower level below this 4280 that we could see the Emini S&P 500 go down and tag before we see a little bit of a reversal back up. So as you can see, everything closed right near the weekly rewrap and also the point of control. And that is not totally a surprise, right? Because it is a Friday, and with option expiration, OpX, the lot of price will converge to that, the accepted price, that highly accepted level or close to it, right? So we're seeing these rewrap and a point of control and see the price converge to that level into the Friday's close is not a big surprise. Now here, looking at the market profile here for the ES, you can see that it came down and filled the single print today, and that's where those lows are that we're looking for to get retested. Right, so it came down and filled those those single print, and dip below it. Now I haven't updated these this chart yet with the updated level, like today's POC, right, over here, and also the single print. So for next week, we'll probably be watching for the single print to get filled. And also, I'm not sure is that a or low or not. But in regardless, we're basically looking at this level down here, this July 19 point of control at 42.3850, that area. We could see the price come down and tag this particular level. And there are also some single print down here in the latter part of June. I wouldn't be surprised, to see it come down to this 4,200 level. I mean, that's a possibility, right? One swoosh and come down and take out all these, resolve all these single print that's been left behind for quite a few months, right? And then come back up. So just kind of keep an eye on these, lower level. I post these market profile chart on my Twitter stream every evening, so you might want to check my Twitter stream to get an update on these chart. Now, also looking at this volume profile, just want to highlight this. Essentially, if you were following me on my Twitter stream last night or early in the morning, we're talking about this particular head and shoulder pattern, or inverted head and shoulder pattern, right? And matter of fact, we're trading that, and so we're basically at the first level, the target was up here at this value area low, then the point of control from the prior session. And as you can see, it came up and put in an overnight high here. So yeah, I didn't catch it all the way up here. I basically was targeting this level here, okay, the point of control 4302.75. So I'm finished with the trade once it come up, and then you can see the early morning open, they kind of faded back down and then put in a little bit of a double bottom before they push it back up. So you put in a little double bottom and came back and back test this pivot breakout before it pushes away, right? Also, I mentioned that these are, this is a tick chart. So on the tick chart, you can see the pattern a little bit more clear, right, than the candlestick time-based type of chart. So you might want to give that a try. Set up a tick chart on your charting platform and see, could you see some of these patterns a little bit more clear? because you can see here, you got a little bull flag here too, right? So, so you can see all those stuff a little bit more clear on the tick chart, at least in my perspective, for me. So maybe different people have, different eyesight to identify those patterns, no matter what type of chart that they use. Well, that's it for this week. Hope you didn't get spooked out or got too much damage on your trading account, or you might have got on the right side of the market and made a lot of money on the downside. So but be careful out there, and be sure to smash that thumbs up to help me promote and share this video. Thank you for watching, and stay safe.